Hey buddy, welcome to my video, Crazy Investor. There was a time when buying SpaceX stock was a complete dream for the average investor. The company was private, closed, part of a club only accessible to select funds and billionaires. Then one morning we woke up and everything had changed. Rocket sounds in the corridors of Nasdaq, astronaut suits, celebrations. SpaceX was now a stock everyone could buy, buddy. So, theoretically, you're now a partner in the same company as Elon Musk. Congratulations, you're not in the same yacht club anymore, of course, but at least you're reading the same annual report. But here's the real question. Are people really buying the future or the most expensive dream in history? We won't give you the answer right away, because this story is much more complicated than it seems. In mid-June 2026, SpaceX went public on Nasdaq under the ticker symbol SPCX, achieving the largest initial public offering in history. It surpassed Saudi Aramco's 2019 offering of $29.4 billion, which previously held the title. Shares were offered at $135, but jumped significantly above that price at the opening. The initial excitement was so great that Robinhood broke its platform's traffic record. I don't even want to imagine what the servers felt that day. It was like the whole world was trying to press the same button at the same time. The numbers are truly mind-boggling. Approximately $75 billion was raised, and with additional options from investment banks, this figure exceeded $85 billion. The company's valuation at the IPO price was $1.77 trillion, but even that wasn't enough after trading began. SpaceX briefly surpassed $2 trillion, even at one point overtaking Amazon and Microsoft in market capitalization. Charles Schwab, Fidelity, Robinhood, Sophie, Morgan Stanley's E-Trade, all these names became partners in SpaceX's IPO. And this list is no coincidence. SpaceX didn't want to leave this solely to giant funds and institutional investors. Ordinary people, perhaps you watching this video right now, were able to access this stock directly. This single decision was a message. Musk wanted to share this story with millions of small investors. So now even your uncle next door can say, I'm a partner in the rocket company too, while having his morning coffee. Whether you feel proud or spill your coffee in fear, both are sensible reactions, my friend. Now think about it, buddy. A rocket company is becoming more valuable than some of the world's most established tech giants. Doesn't that sound strange, buddy? That's where things start to get interesting. Because the hype didn't last. The stock hit an intraday peak of over $225 on June 16th, then fell for 3 consecutive trading days. By the end of June, the price was around $153, still above the IPO price, but far below that initial peak. It's as if the market is asking itself a question: is this hype real or just first-day excitement? It's like a roller coaster. First you're sent soaring, then you think, okay, but why did I buy a ticket for this? To find the answer to that question, we really need to understand what SpaceX sells. Because, believe it or not, SpaceX is no longer just a rocket company. Yes, they still launch rockets. The Falcon 9 has become the world's most frequently launched rocket, and thanks to its reusability, it has driven costs far below its competitors. They transport astronauts for NASA, launch military satellites for the Pentagon, and put dozens of satellites into orbit for commercial clients. But there's a twist. Rocket operations make up only a small fraction of SpaceX's total revenue, and there's a reason for that. SpaceX controls almost its entire production chain. They design their own engines, manufacture their own rocket bodies, and operate their own launch pads. While traditional space companies rely on dozens of suppliers, SpaceX's vertical integration allows them to squeeze costs, increase speed, and achieve a level of efficiency that competitors haven't been able to match for years. That's why a Falcon 9 launch costs a fraction of what competitor launches cost a decade ago. In 2025, SpaceX generated a total revenue of $18.7 billion, with only $4.1 billion coming from the space segment, that is, launch operations. The vast majority of the remaining revenue comes from a business most people wouldn't even think of: Starlink. Starlink is satellite internet, but calling it satellite internet is an understatement of its scale. In 2025, Starlink alone generated $11.4 billion in revenue, or 61% of the company's total revenue. In the first quarter of 2026, that figure rose to 69%. Imagine SpaceX which we call a rocket company, is now selling internet from the sky as its main money-making machine. And the growth of this business is truly striking, my friend. In 2023, Starlink had 2.3 million subscribers. By the end of 2025, that number had reached 8.9 million. In the first quarter of 2026, it reached 10.3 million, and as of June, it had over 12 million subscribers. They operate in over 160 countries. Ships, planes, military units, homes in rural areas, everything is now connected to SpaceX satellites. But here's another twist, and it's important. As Starlink grows, average revenue per user actually decreases. In 2023, they were earning $99 per subscriber per month. In 2025, it dropped to $81, and in the first quarter of 2026, it fell to $66. The reason is simple. SpaceX is aggressively entering price-sensitive markets like Africa, Southeast Asia, and Latin America, attracting more subscribers at lower prices. Then, in May 2026, they reversed course and raised prices slightly. It's as if the company is saying, enough growth, let's make some profit. Now add artificial intelligence, my friend, because the story takes a whole new turn here. In early 2026, SpaceX officially acquired Elon Musk's AI company, xAI. This also brought Grok and the X platform under SpaceX's umbrella. And this move was not in vain. Anthropic announced it will pay $1.25 billion per month until May 2029 for access to computing power in SpaceX's data centers. A single cloud computing deal has become a multi-billion-dollar revenue stream. Now, the question we need to consider here is, what is SpaceX now? A rocket company, an internet service provider, or an AI infrastructure giant? The answer might be all three. So, when all these pieces come together, why do some investors believe SpaceX could be one of the biggest investments in history? Let's look at the bullish scenario. First, consider Starlink. Billions of people around the world still lack access to reliable internet. SpaceX's laser-linked satellite network could be the only infrastructure to fill this gap. Analysts estimate that Starlink could reach 16 to 17 million subscribers by the end of 2026. If this growth continues and prices gradually rise, profit margins could start behaving like software companies, because once the satellites are in orbit, the cost of adding a new subscriber is almost zero. Then add the Pentagon and defense spending. Geopolitical tensions are rising globally, and governments are allocating billions of dollars to space and satellite infrastructure. SpaceX is in a position to grab the biggest slice of this pie, because it has the cheapest launch capacity and already operates a massive satellite network. Now look at the AI side. Data centers are starving for processing power, and that starvation is growing every month. SpaceX's deal with Anthropic may just be the beginning. If the company expands this capacity and leases it to more technology companies, a completely new revenue stream will emerge, and this stream is far less risky than launching rockets. And of course, don't forget the Mars vision, my friend. This is a story that doesn't appear on today's balance sheet for most investors, but it's in the company's DNA. When Starship becomes operational, it will not only launch larger satellites, but it could open the doors to an entirely new space economy. Things that seem like dreams today, like space tourism, orbital manufacturing, and lunar mining. Some analysts therefore no longer see SpaceX as a single company, but as a small economy in itself. Think about it. On one hand, there's launch infrastructure. On the other, the world's largest satellite network. On yet another, a growing AI cloud. And all of these feed off each other. Starlink satellites are transported by Starship. Starship's development costs are financed by Starlink's cash flow. And the growing data center capacity feeds both Grok and external customers. This closed loop creates an incredibly difficult to imitate competitive advantage. Sounds unbelievable, right? That's where we need to look at the other side of the coin. Because every bright story has a shadow, and SpaceX's shadow is quite long. The first and biggest risk is pricing. At its IPO valuation, SpaceX was priced at a multiple of approximately 90 to 100 times its 2025 revenue. Think about that for a moment. Among the world's most valuable trillion-dollar companies, there are almost no others trading at such a high multiple of their revenue. Moreover, the company is still losing money. Operating losses were $4.2 billion in 2025, and this loss grew even further in the first quarter of 2026. Then add the competition. Amazon's Kuiper project, now commercialized as Leo, has partnered with giants like Verizon, AT&T, and Vodafone. Amazon also entered the direct device connection technology market by acquiring Globalstar. This could be a sign that Starlink's monopoly position may not last forever. Regulatory risks cannot be ignored either. The FCC has granted Starlink additional satellite permits, but some of these permits are conditional. If interference with legacy satellite systems is proven, SpaceX could be forced to immediately halt operations. Rival operators are already signaling their opposition. Despite all these risks, doesn't this story sound familiar, my friend? Because it should. Apple was seen as a dying computer company in the early 2000s. Amazon was ridiculed as a never-to-make-money e-commerce experiment because it hadn't made a profit for years. Investors were betting on Tesla's failure while it experienced factory hell on its production line. Nvidia, a mediocre semiconductor company selling playing cards, wasn't seen as the heart of artificial intelligence. Microsoft, in the early years of cloud computing, was dismissed as an old-fashioned company. The story of SpaceX lies somewhere in the middle of these two paths. On one side, there's a company with the world's most advanced rocket technology, a rapidly growing satellite internet network, and a nascent artificial intelligence infrastructure business. On the other, there are massive losses, an excessively high valuation, and the risk of reliance on a single individual. Perhaps the right question isn't buy or sell. Perhaps the right question is, are you ready to buy tomorrow's dream at today's price? Big companies don't always mean big investments. But history reminds us of something. Many of today's most valuable companies once seemed very expensive to everyone. The story of SpaceX hasn't been written yet. And perhaps after watching this video, you will decide for yourself how the story will end. If you liked my video, don't forget to like, comment, and subscribe, my friend. Take care. Goodbye.